Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Monday. Hope you had a great weekend. Found some way to put some distance between yourself and the charts. And by the way, this morning, probably in the next hour or so, those of you that have access to this week in the markets, that should be posted really soon, so you can check out what my game plan is for this week, what's on the radar, and why. What are the drivers of the broader averages, whether that be the individual stocks, sectors. What is my bullish and bearish watch list for this week? So you can check that out there. All right. So again, great to see everyone. Before we jump into the questions, as always, feel free to type in the symbols, time frames, positions, whatever that you have by way of questions, and we'll dive on into it. We're going to take a quick peek at the three markets, the three symbols that allow us to get a pretty good read. And I say pretty good because ultimately we want to get a little bit more detail. But if you want a broad general overview, the S&P, the Euro, and the long bond, or even notes, or just some treasury, it could be the 2-year, 10-year, or 30. Just take a look at one of the treasuries, see where yields are heading. Right now, we know we have an inside candle. Right now, we have an inside candle on the daily chart of the S&P. Now, this continues, if we look back on last week and say, why was last week so tough? Did it scream higher and it was tough to jump on? Was it just selling off mercilessly? It was neither. The entirety of last week's range could be summed up in the high to low we saw on Wednesday. So we have been trading in this range. Again, if you just draw a high and a low, or a line across the high and low of Wednesday, you'll see we've been stuck there since last week, right? And even now we continue to stay in that range. Today is not only within that Wednesday range, it's also within Friday's range. So until we break out of this range, what do? When clearly we look at that daily time frame and say, we're not going anywhere, right? Until we get higher through Wednesday's high or lower through Wednesday's low, we're still in that range. And then more near term, we've got to break higher through Friday's higher low. Right now, the most important thing I can say is we're at least above Friday's close. That is the line in the sand. And that at least gives us a little bit, and I do mean a little bit, of bullish bias. But again, remember, the follow through is going to be what's so difficult. When we have an environment where we're stuck in a range, it's not that we won't get triggers for entry. It's that the follow through that comes is going to be very difficult. All right, taking a look at the euro here. The ECB sent out a pretty confusing message. I mean, they are hawkish. They are still quite vocally, quite vocal about the inflation issue they have. So they are still within their tightening cycle. They're still hiking rates. And arguably, the FOMC, as of May's hike, they're done, right? We're very likely done at this point. That's going to allow the euro to gain against the US dollar. So while the US dollar's sitting at resistance, the euro is sitting at support. And this is where I would expect the dollar to head back down, the euro to head back up in line with the respective central banks. Okay. And then lastly, let's take a look at the 2-year. The 2-year is where that 10 and 2-year spread, something I dive into in this week in the markets. This is where that 10 and 2-year spread, this is one half of that conversation. This is the end of the yield curve, the very shorter end of the yield curve. I mean, there's obviously 3-month and 6-month, but it's the shorter end of the yield curve. And we want to see the 2-year move higher in alignment with what the Fed Fund Futures, another futures contract, says about what the Federal Reserve is likely to do, which is now we're in that pause window, and it's going to be then September or November for the cut, for the loosening, for the dovish monetary policy, for the much anticipated and quite discounted Fed pivot, right? So this is where we sit on that shorter end of the yield curve. All right, so that is what we've got going on. And let's see here. Let's jump into Our first question. Good morning. Good morning. All right. Megawatt asks, what indicators are included with my subscription, such as this week in the markets? And okay. Megawatt. Right. So if you want to join the clubhouse, so to speak, this is where we get together 5 days a week. We day trade in the morning. We look for swing trade, short-term swing trade setups. And on Tuesday, we look for the longer term portfolio. There's a lot that we do. That's just those specific trading sessions along with the alerts. All right. So hang on one second here. All right. So what's included? Well, we just added the This Week in the Markets newsletter to the Sector Secrets Mastery. What's included with the subscription? So that's normally $79 a month. That's included with the Sector Secrets Mastery, which is pretty great. That's $267 or whatever it is a quarter. Anyway, I'm clearly not doing the math thing very well in my head this morning. Who says you need to be good at math to be a trader? You don't. But what else? We have also a number of indicators that I make available to Mastery members, the multi-trend being one of them. We have our multi-trend down in here, and I do make a limited number of hourly price movement ranges for the indices available. There's an entire layout of specific tools that we give our Mastery members. So yes, newsletter, a number of custom indicators, and of course, 5 days a week in the Mastery. So I hope that gives you an idea of what you have access to. You jump on in on those sessions that mean the most to you, that you would like to take advantage of. Everything's recorded, and any time frame aside from the day trading is sent out as an alert. So if you can't be with me in the room for those sessions, you can check out the alerts that are pushed through into the Simpler Trading mobile app, as well as in that trading room. All right, thank you for the question. Next up, RD asks, we take a look at Nvidia from Friday's fall. I wouldn't call it too much of so to me, a really tough fall, RD, and great question. A really tough fall is if we close near the lows of the session. That's a heavy candle, right? Where that candle body is so low, we don't even really have a wick below the candle body. And that's not necessarily what we have in Nvidia. In fact, I think what we can continue to look for are buy the dip opportunities, whether that be off the 34 EMA wave, the 34 period exponential moving average on the high, the close, and the low, or the DPMRs, which have done a pretty darn good job as support, which are the yellowish and the kind of, I guess you could say, gold and gray zones on this screen. I would look for exclusively the long side. We are in an uptrend on the daily, and I would look for support levels like that. So that move lower, that fall, as you mentioned, that's a retracement. And those retracements are oftentimes going to give us opportunities. Now, if you don't want to be committed to as long a time frame as the daily, I get it, right? The next best thing we can do is look at the 1 hour. And you'll see here on the 1 hour, at the 12:30 1 hour candle, we hit the daily price movement range. And from that entry, 280, call it 280.80, 280.75, this morning we're going to open up about, not quite, but about 4 points above that. So those are the kind of trades that I would look for on Nvidia, and that's the tool that I would use to do it. All right. Thanks for the question, RD. Next up, Andres asks, when I say don't fade Mondays, well, I actually say don't fade Fridays, but I don't like to fade any day, to your point. So when I say don't fade whatever the day is, what exactly do you mean? It means that let's just use this Nvidia for a moment, right? Let's go back to this example of Nvidia. I can do this on any symbol. Fading would mean that as we're selling off, right, don't necessarily buy it, right? If we're selling off in the S&P on, and we don't really have a great example of this here, but fading means as we're selling off, traders tend to want to buy, or as we're rallying, traders want to sell. I'm not a big fan of that being the last trade of the day and taking that position overnight or over the weekend. That's what I mean by don't fade. A lot of traders think, such a weak market. Clearly, there must be a buy opportunity here. Not always. So that's what I mean by don't fade the close. And I'm not a big fan of fading Fridays. No. So that's what that means, right? Our Monday. So it's. I never say don't fade Mondays. It's Fridays. But I do believe in really not fading any day, right? It doesn't matter if it's Friday or the other 4 days of the week. So that's what I mean that let's not presume that there's going to be a reversal. That's really it. That's what I'm looking for. Now, if there is an opportunity to be a buyer, that's where this example of NVDA is so cool. That's not a fade. That's just a legit daily price movement range low that's sunk into a trigger zone, if you will. So I do not recommend, again, at the very end of the day, looking at price action saying, wow, it's so weak from 3:30 to 4. Let's go ahead and buy it, or vice versa. All right, next up, how do I get in touch with you to invest? I do not invest outside money. So regardless of the scamsters that use my picture and my name to DM you asking for money, sometimes in this very chat, you'll have people scamming in my name. Crazy, right? I do not invest outside money. I am a private, self-funded retail trader who has a community of other self-funded, self-directed retail traders, and we trade our own money. I do not manage money, but I do appreciate the question. All right, Pat, CL. Gosh, crude's been a tough one, my friend. Yeah, crude's been a tough one. And if we take a look at what's been happening with crude, really volatile, really, really volatile, and not bearish, but not bullish. We're just bouncing around. Now, I will say the closer we get to these previous Darvis lows at 64.30 and say 63.50, that area, that looks like an oversold buy. Use a slow stochastic as I teach to identify maybe where that turning point and that oversold buying opportunity against the floor. What is a floor? A floor is support. What is support? Support are buyers. What do buyers bring to the table? They bring demand, right? So whether it's support, floor, buying, demand, it's all the same thing. And that's where I would look for that to happen. In the meanwhile, maybe shorten the time frame, 1 hour, short-term swings, maybe 5-minute day trades. But crude's been difficult, and as bearish as it's been, despite the production cuts, you can see that the oil stocks, XLE, XOP, OIH, those oil stock, those sectors, those groups of oil stocks have been hit very, very hard. Right now, I can't say, for as eager as I am for crude to be oversold and rally, we are still in the bearish hemisphere, which is to say we are below the 200-period exponential moving average. And that's going to carry with it sort of a bearish sentiment. So be really cautious with crude. It's less than ideal. We do have an oversold zone, but we're not there yet. Shorten the time frame. We'll probably get some nice smaller window opportunities. And when I say smaller window, I mean time horizon. How long could you possibly be in the trade? Keep it short. I think you'll be great. Okay, next up is, bear with me here. Thoughts on Sherwin-Williams? Sure. I was just looking at XHB and ITB today. There are some strength plays in those names. Sherwin-Williams, it's sitting on a pretty decent point of control for the year, as you can see right here around 227. That's about as positive as I can be about it. So this is where it's not about Sherwin-Williams is bad or good. Otherwise, it's never that binary. It's more along the lines of why Sherwin-Williams, of all the things that have earned our attention, right? Of all the different symbols that we could look at, thousands of them, right? Of all the symbols that could earn our capital and earn our attention, my first question is always not how can I trade Sherwin-Williams, but it's usually why do I want to trade Sherwin-Williams? And I think if you go through a little bit of a relative performance of stocks that are moving with Sherwin-Williams in those sectors that Sherwin-Williams is heavily weighted within, you'll find it may not be near the top of your list. And that to me is, a big part of the watch list building that we do, whether that be in This Week in the Markets or whether that be in the Sector Secrets Mastery. All right. Can the same logic we're using on Nvidia this week be used on AMD? So the logic goes, the reason I can, if I can, consider AMD in the same light as Nvidia, on one hand, you might say, look, if SMH is a rising tide, if QQQ is a rising tide, why wouldn't AMD go along with it? That's clearly a very justifiable way of looking at an individual, albeit quite heavily weighted stock in semiconductors, and then the rising tide in tech. But more specifically, kind of along the lines of the same question Andres had about Sherwin-Williams, Jay, the thing is, AMD and Nvidia are not in the same underlying market condition, market trend, market structure, whatever you want to call it. They're not behaving the same way. So while they're in the same corner of the market, very similar, and they have similar exposure to different sectors and indices, Nvidia is more exposed to the NAS than AMD. AMD is more of a semiconductor SMH narrative, SOX even, but they're not the same underlying market structure. So no, right? Yes, on one hand, they're in the same group, right? But on the other hand, AMD is in chop while Nvidia is in an uptrend, right? So we always start at the bottom of the chart. We always ask ourselves, what is the structure? Because at the end of the day, why I choose a particular strategy or why I even choose a particular indicator is absolutely tied to what the underlying structure is. Structure dictates strategy. And so the strategy is going to be different for AMD than NVIDIA. All right. Let's see. Next up is what are my thoughts on AT&T? T is a downtrend. Yeah. So on my bearish watch list, rainy days, T is absolutely a downtrend. Yeah, absolutely. Yeah, I am not, I am not, I would look to short the rips there on T. Yes. Sergio asked, do I have extended hours in my trading view? Yes, always extended hours. I am always looking at, and so I try to make sure that, well, I'm on the East Coast, and then, yeah, I will use, I know there's a place to check that, but yes, I will always go and use extended hours on stocks, of course, on futures, right? Futures, those aren't even fair to call those extended hours because the futures markets are already open and liquid. So I do definitely want the extended hours. Futures are practically a 24-hour market anymore. And then I will do the same thing to stocks, not because there's a ton of volume before 9:30, but because, think of it this way, whatever indicators you're using, do you want them to get a little bit of a rolling start, albeit on lower volume and maybe spottier price action, but would you like them to get a rolling start as opposed to boom, just calculating at 9:30? I prefer the former, not the latter. Hence, I turn those extended hours on. Okay. All right. Next up is what are my thoughts on the energy sector? Mark, yeah, XLE, OIH, XOP are all a mess. I need to get a better read on crude before I'll get a better understanding of what could happen with the likes of Chevron, etc. Exxon's hanging in there, though, so we might see this individual large boat. I did not put it on the bullish watch list in This Week in the Markets. And by the way, you can check out This Week in the Markets, the offer that we have, $7 trial for the month. You get a new issue and a new video every single week. You can check that out there. Those of you that already locked in on that deal we did about 2 or 3 weeks back, fantastic. But the next best thing is letting you check it out for $7 for a month. This week in the markets.com. I was going to put Exxon on there because it's sitting on the 200. We might just make this a Sector Secrets Mastery short-term swing instead. But that's about as bullish as I can be. There are a handful of other lower weighted stocks that are hanging in there. But yeah, overall, the energy sector is a mess. Yeah. All right. So that is it. All right, gang. As always, thank you so much for, oh, Ryan, sorry, I missed your question on JetBlue. Sorry about that. JetBlue is under $10. It's a volume game. Ryan, anytime you have a stock under 10 or 20 bucks, it is a volume game. Find out where the volume is, trade with them. Your point of control sitting at about $6.86. That's where you want to make sure there's some good gravitational pull. If not, we could test that 650 area again. but it's going to be really, we're not going to see significant move to the upside till we break 730. Okay. All right, gang. As always, thank you so much for being here for Charts and Coffee, Monday through Friday, right here at, well, Simpler Trading YouTube, my YouTube, Facebook, and Twitter. Shout out to all of you tuning in every day. Same time tomorrow. Be good to each other.